Should you or should you not invest in a rental property? This is going to be a long video because it's full of calculations and numbers. So brace yourself for a lot of data. Let's go. Now, to give you an idea, what I mean by a rental property means basically you buy a property, you rent it out, and you use the rental income to pay for the mortgage. And if there's any shortfall, then you top it up in cash. So for today's video, I'll be using a $1 million 6 Derbyshire 1-bedroom condo as an example. Why this property? Because in the previous video, we calculated based on this property as well. So this will give you a clearer understanding whether it's worth or it's not. So first up, let's calculate the initial outlay. We will use the property value of $1.09 million multiplied by 29% minus $15,400, which will land you at $300,000. This is inclusive of your buyer's stamp duty. Now we are done with the down payment. Let's talk about the monthly repayment. So the monthly installment based on a 30-year loan tenure will be $3,447, and based on Property Guru, the average rental of the same unit type is $3,500. Your OA would have an income of $1,428 thanks to the increase in the CPF contribution. I don't know whether you like it or not. Tell me your comments inside the comment section. So, and not forgetting your property tax of $150 and your monthly maintenance of $360 based on what we see in Property Guru. Your total net cash flow would be by adding the rental income and also your CPF OA minus your total monthly repayment. That will land you at $970. Here's the calculation over there. Pause if you need to read. But before we continue further, right, please don't forget to help me to smash the like button because we take very long to produce this video. And if you enjoy watching our content, consider subscribing because we are posting almost every week. Now, back to the topic. Positive cash flow, $970 per month. Worth it or not worth it? It depends. Why? Because if you are not so good with your money and you know that you constantly make poor financial decisions, then maybe consider the previous option of not using your CPF. I think that's a very frugal way. Like my next house, I'm not going to use CPF as well, even though I got a couple of $100,000s. But we're not going to use. Why? Because I save it for my rainy days. This part aside, let's go back to the main topic. So over 10 years, whether is it worth it or not, let's calculate how much you're able to get back after 10 years. With 10 years, right, your outstanding loan will be down by another $196,000. So the outstanding loan will be $621,462. So as far as your interest would add up to $217,000. So you look at this current calculation, right, it's quite interesting because when you're buying a property, you must always understand one thing: there's principal and there's interest. So by paying an installment of, in this case, $3,000 plus, right, doesn't mean the $3,000 plus is all interest. Actually, about 50% of it is going into your principal repayment, which I call it savings. The balance would be interest, which in this case is $217,000, is given away, right? But out of this installment that you have been paying in the last 10 years, right, $196,000 is actually your savings. So let's rewind a bit. Remember the monthly positive cash flow of $970 per month. Today, the total positive cash flow will be $116,000 over 10 years net. So assuming this property appreciates by 2% per annum, we will use my similar trick: 1.09 multiplied by 1.02 equal. So to save your time is $1.328 million. So if you ask me, is it good appreciation? I don't know. I think it's pretty decent. So after 10 years, your property value is $1.328 million. If you minus the outstanding loan by then of $600 over 1,000, which means you're getting back almost net $700,000 after selling your property. And not forgetting the positive cash flow of $116,000, that will equate to a total returns of $823,000. So remember what was the initial outlay? Initial outlay was about $300K, and today you are getting back $823,000. So what's the total net return? If you ask me, getting back $500,000 extra over a 10-year horizon actually is pretty decent, given that when you're buying real estate, the risk is way lower than many other kind of investments that we are talking about, the assets that you acquire. The total we calculated was 174% gains from the initial $300,000. So worth it or not, let me know. But in case you didn't notice, it's almost double. But again, I want to put a disclaimer over here. Different people are different level of managing their finances. Some of you, maybe you are better off trading in the stock market, buying ETFs, all these things. Absolutely up to you. But for me, I think real estate, in my context, is always a good investment for lazy people. They don't like to read reports. They don't like to watch the market. Because I trade stocks also. I also have a portfolio of stocks and shares. I also buy T-bills and stuff like that. But I realized that one thing is that sometimes it's not that easy to follow the game plan, because when you are trading stocks and shares, it's so volatile. Sometimes a lot of emotion is involved. But real estate, 3 years, no emotions. You want to sell also cannot, because if you watch my previous video, you need to pay seller's stamp duty if you want to sell early, and it totally don't make sense. So if you're someone that is lazy like me, kiasi like me, and also not always making very good financial decision when it comes to spending money, buying things, right, then real estate is something you can consider, and that is definitely something that can help you in the long run. Now, I think I've come to the end of this video already. If you enjoyed this content, let me know in the comments. Hit the like button, consider subscribing, because we produce weekly real estate videos, and this is something that can help your friends around you if you share it, because real estate news and real estate content can help anybody as long as you share it. Thanks for watching, and I'll see you at the next video. Bye.